Hello everyone, my name is Helena Vadia and today I am presenting my fraud in the press case on Delta Airlines False Claim Act violation related to the payroll support program. This case shows how even large respected companies can commit fraud by not just following government rules tied to federal relief funds. During the COVID-19 pandemic, many airlines struggled to stay in business while continuing to pay their employees. To help the US government created the Payroll Support Program or PSP. It provides billions of dollars in aid to airlines as long as they agreed to follow certain rules, including limits on how much money their executives could earn. Delta Airlines, based on Atlanta, Georgia, joined this program in 2020 and 2021. They signed agreement with the US Department of Treasury promising to follow the PSP compensation limits. However, between March 2020 and April 2023, Delta violated these agreements. They pay some corporate officers and employees more than the PSP allowed, some earnings over 420,000 per year. The issue became serious because Delta also certified falsely in their reports that they were following all PSP rules. By doing this, they violated the False Claim Act, which prohibited lying to obtain or keep federal funds. The Department of Justice later found that Delta not only exceeded the pay limits but also failed to report the problem when they discovered it internally. This fails to report mean the US government continued to send funds under false information. Overall, this case highlighted how important it is for companies, even major ones like Delta, to stay honest and transparent when using taxpayer money. Now let's look at the first three parts of fraud using Delta's case as an example. These parts help us understand how the fraud was formed and how it misled the government. The first part is representation or the lie. In this situation, Delta Airlines certified in their official reports that they were following all the rules of the payroll support program. These certifications were sent directly to the US Department of Treasury. By signing and submitting those forms, the company was promising that no executive pay would go above the PSP limits. However, those statements turned out to be false. Internal payroll records later showed that Delta's executives actually earned more than allowed. In some cases, over 425,000 in single year. So the company represented that everything was fine when it clearly wasn't. The second part is material point. In fraud terms, a material point means that the false information was important enough to influence someone's decision. Here, the false certifications directly affected whether the US Treasury continued to release funds because these reports involved millions of taxpayers' dollars. This wasn't a small or accidental error. It was a major issue that had a real financial impact. Let's move on to third. The third part is false statement. This is where the actual evidence comes in the clear, factual proof that the company lied. Delta's payroll documents and financial data showed executive pay levels that violated the PSP rules. Those same records were compared to the company's signed certificates and revealing that Delta had knowingly submitted information that wasn't true. When you put these three parts together, the false representation, that materials importance, and the document false statements, they form the foundation of entire fraud case. This stage of the fraud shows how something as simple as signing a form of can lead to legal violation when the data behind it doesn't match, even though it might seem small. These details matter when public money is involved. In short, the first three parts demonstrate how the fraud began on paper but ended up affecting real financial outcomes for both government and taxpayers. Now that we have seen how the fraud began, let's move on the remaining four parts, which reveals the intent behind the fraud, how the government responded, and what impact it caused. The fourth part is intentional or reckless. This part looks at the whether the person or the organization acted the clear intent to deceive or if they were careless in the way that still caused harm. In Delta's case, the company discovered the overpayment to executive but failed to report them right away, even though they knew the payments exceeded the allowed limit. They didn't alert Treasury Department immediately. Their delay allowed the government to continue sending payroll support funds based on false information. This behavior may not have been an obvious act of lie, but it definitely shows recklessness and disregards for the rules. Under the False Claim Act, being reckless with federal reporting is enough to continue as fraud because it still mislead the government and the waste taxpayers' money. The fifth part is believed by victim. Here is the victim. The victim is the US Treasury. The department fully trusted the reports Delta submitted. They believed that Delta was following the payroll support program guidelines correctly. Since the company's certifications looked professional and official, the Treasury had no reason to question them. This shows how fraud can succeed even without fake invoices or secret bank accounts. Sometimes it's simply about trust being broken through false reporting. The sixth part is acted upon by victim. Because the Treasury trusted those certifications, it continued to release millions of dollars in payroll funds to Delta. If the government had known the truth, those funds would have been stopped or re-evaluated. This is an important part of fraud chain. It shows a clear cause and effect between Delta's false information and the government financial action. The seventh and the final part is victims' damage. This part measures the real world loss caused by the fraud. In this case, the total damage of the US government was $8.1 million. Delta later agreed to pay that full amount back in a legal settlement which the Department of Justice. The settlement resolved the allegation but also required Delta to strengthen its internal compliance system to prevent future violations. So, when we look at the seven parts together, from the initial lie to measurable financial harm, we can clearly see complete and well demonstrated fraud pattern. It started with false claims, continued through recklessness and trust, and ended with government and taxpayers losing millions before justice was served. This case connects strongly with the concept of our fraud examination textbook. Let's look chapter 2, the fraud triangle. Here we see all three slides like pressure, opportunity, and rationalization. The pressure came from the pandemic and financial stress on the airline industry. The opportunity existed because internal controls and reporting checks were weak, and the rationalization may have been the executives deserved higher pay for their work duration during hard times. For Chapter 3, Internal Controls, the failure here was weak oversight and lack of internal audit controls. If Delta's compliance department had stronger monitoring system, the violations could have been found and corrected earlier. Let's look for Chapter 11, Financial Statement Fraud. The false certifications represent unethical and illegal report, similar to companies that mistake financial data to meet requirements. It's an example of how management fraud can occur even without changing actual financial statements. Chapter 14, Legal Action. Finally, the case shows how civil penalties under the False Claim Act are enforced. The whistleblower provisions allowed H reminds LLC to come forward, and the company received a share of the recovery for helping expose the fraud. Let's look outcomes. The investigation ended in July 2025 with a settlement. Delta Airlines agreed to pay $8.1 million to resolve the government's claim under the False Claim Act. The whistleblower H Remains LLC received a reward of $850 $500 for reporting the case under the whistleblower provisions. This shows how important these laws are for encouraging people to come forward. The Department of Justice said that the case enforced accountability. Assistant Attorney General Brett Summitt explained that the PSP was meant to help workers, not to boost executive pay, and that the government would continue to hold responsibility for following program conditions. Delta did not admit guilt, which is common in settlements, but agreed to pay and correct its internal process. This outcome sent a clear message to other companies. Accepting public money means following public rules. It also showed that government agencies take compliance seriously, even for large and respected corporations. From this case, we learn several key lessons about fraud prevention and ethics. First, when companies receive federal funds, they also take on strict legal and ethical obligations. Every payment and report must be truthful. Second, misuse of government money is fraud, no matter big or well known the organization is. The size of company doesn't protect it from accountability. The third, strong internal compliance is not just a technical rule, it protects a company's reputation and financial stability. If Delta had detected and reported the overpayment earlier, they could have avoided legal action. Fourth, the whistleblowers play a key role in discovering fraud. This case wouldn't have come to light without someone stepping forward. Finally, transparency and honesty build long term trust. When companies act with integrity, they maintain both public confidence and corporate stability. In the end, this case reminds us that fraud doesn't always involve stealing cash. Sometimes it's simply the failure to tell the truth. These are the sources I used: the official US Department of Justice press release from July 2025 and our textbook Fraud Examination by Albert W. Steve, Conan C. Albert, Chan O. Alberts, and Mark F. Zimbabwe, edition 6. And thank you for listening and watching my presentation.